Well, welcome to the Startup Espresso. I'm Hall T. Martin, the host of the show, where we talk about raising funding for your startup and the time it takes to have an espresso. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. In a market recession, it's often the case that limited partners called LPs are unable to fulfill their capital commitments to venture funds. For venture funds encountering this issue, the first step is to open a dialogue with the LPs about the capital needs and the LP's ability to provide the funds. Explore potential options such as lines of credit both for the fund and the LP. Fund managers should discuss with the LPs about their strategy trade-offs between investing in new startups and supporting existing investments. Fund managers should consider the valuation methods as the market environment has changed. Fund managers could also approach the LPs about extending the fund timelines given the new market situation. For those still raising funds, consider updating existing offering documents to adjust the financial projections and risks. Fund managers should also consider the pace of new investments in light of committed follow-on investments. And finally, fund managers should review any potential clawback situations and adjust accordingly. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start up something today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.